Ever wondered how much of your hard-earned money goes towards simply managing your investments? It's a question many of us ponder, especially when it comes to seemingly straightforward options like cash management accounts. Today, we're diving deep into a very specific corner of this, the management fee on Vanguard Cash Plus. Now, before we get laser focused on that exact fee, let's zoom out for a moment and understand why this even matters. You see, when you entrust your money to a financial institution, whether it's in a savings account, a mutual fund, or a cash management account, there are often costs involved in keeping the wheels turning. These costs can come in various forms, and one of the most common is the management fee, sometimes referred to as an expense ratio. Think of it like this: you hire a property manager to look after your rental property. They charge a fee for their services, handling tenant issues, collecting rent, and ensuring the property is well maintained. Similarly, financial institutions employ teams of professionals who manage the underlying assets, handle transactions, provide customer service, and ensure regulatory compliance. The management fee is essentially your share of these operational costs. Why should you care about this fee, especially for something as seemingly simple as a cash management account? Well, even small percentages can eat into your returns over time. Imagine you have a significant amount of cash sitting in an account. A seemingly negligible 0.1% management fee can translate to a substantial amount deducted from your balance year after year. Understanding these fees allows you to make informed decisions about where to park your money and maximize its growth potential, even if that growth is modest in a cash-focused account. Now, Vanguard is a name that often comes up in discussions about low-cost investing. They've built a strong reputation for their commitment to minimizing fees across their range of investment products, from index funds to ETFs. This philosophy is deeply rooted in their unique structure. They are owned by their funds, which in turn are owned by their shareholders. This client-first approach theoretically aligns their interests with yours, aiming to keep costs down. Given Vanguard's reputation for low fees, it's natural to assume that the management fee on Vanguard Cash Plus would also be minimal, if it exists at all. And this is where we get to the crux of the matter. Let's investigate this directly. What is the management fee associated with Vanguard Cash Plus? Here's the key takeaway: Vanguard Cash Plus, as it is currently structured, does not typically have a direct, explicit management fee charged to the account holder. That's right. Unlike mutual funds or ETFs where you'll see a clearly stated expense ratio, you generally won't find a line item deducting a percentage of your Vanguard Cash Plus balance as a management fee. Now, this might lead you to think, great, it's completely free. But it's important to understand the nuances here. While there isn't a direct fee you see deducted, Vanguard, like any financial institution, has operational costs associated with running the Cash Plus service. These costs are factored into the overall economics of the product. Think about it. They need to maintain the platform, process transactions, provide customer support, and ensure the security of your funds. These activities aren't free. So, how does Vanguard cover these costs if they're not directly charging a management fee? The answer lies primarily in the net interest margin they earn on the deposits held in the Cash Plus accounts. Here's how that works. When you deposit money into Vanguard Cash Plus, Vanguard doesn't just let it sit there. They typically hold these deposits in accounts at partner banks. These banks pay Vanguard interest on these deposits. Vanguard then passes on a portion of this interest to you as the yield you earn on your Cash Plus balance. The difference between the interest Vanguard earns from the banks and the interest they pay to you, minus their operational costs, is their net interest margin. This margin is how they generate revenue from the Cash Plus service without charging a direct management fee. So, while you don't see a specific percentage deducted as a management fee, the cost of managing the service is implicitly factored into the yield you receive. A lower yield, compared to potentially higher yielding but perhaps less liquid or more risky alternatives, can be seen as the indirect cost of the convenience and security offered by a cash management account like Vanguard Cash Plus. It's also worth noting that the specific features and partner banks associated with Vanguard Cash Plus can potentially evolve over time, which could indirectly impact the economics of the service. However, the core principle of not charging a direct management fee is generally held true. To further illustrate this, let's consider a hypothetical scenario. Imagine Vanguard holds a large pool of Cash Plus deposits at a partner bank and earns an annual interest rate of 5% on these funds. If they are paying out an annual yield of 4.5% to their Cash Plus account holders, the 0.5% difference before operational expenses represents their net interest margin. This margin helps cover their costs of managing the service. Now, why is this distinction important? Because when you're comparing different cash management options, you need to look beyond just the presence or absence of a stated management fee. You need to consider the overall yield being offered. An account with no explicit management fee but a very low yield might end up being less beneficial than an account with a small management fee but a significantly higher yield. Therefore, when evaluating Vanguard Cash Plus, your primary focus should be on the annual percentage yield, APY, being offered. This APY represents the total amount of interest you can expect to earn on your balance over a year, taking into account the compounding frequency. It's the net return you receive after Vanguard has factored in their operational costs. Beyond the yield, consider the other features and benefits of Vanguard Cash Plus. The FDIC insurance provides peace of mind, knowing your deposits are protected up to the insured limit. The convenience of check writing and online bill pay can be valuable for managing your day-to-day finances. The integration with Vanguard's broader investment platform can also be attractive if you already have other investments with them. So, to summarize the key point, while Vanguard Cash Plus doesn't typically charge a direct, explicit management fee like a mutual fund expense ratio, the cost of managing the service is factored into the net interest margin, which ultimately influences the yield you receive on your deposits. Your focus should be on the APY to understand the actual return you'll earn. In conclusion, while you won't find a specific management fee listed for Vanguard Cash Plus in the same way you would for a mutual fund, the costs of managing the service are intrinsically linked to the yield you earn. Focus on understanding the APY and the overall features and benefits to determine its value for your financial strategy. With that said, thanks for watching and until next time.